You have just started your trading journey and now you are wondering how you can spot the right time to snap your entries like a high-level trader does. In this video, I'm about to go over the main candlestick patterns that you need to recognize in order to become a profitable trader. Let's start with a quick refresh. For those who don't know what a candle is, it's a time-based showcase of where price has been in the market. We have the body, which is the thick part you see of the candle, and we have the wicks, which showcase the high and the low of price within the time frame of the candle. So if this was an hourly candle, this would have been the high, this would have been the low. If price opened in the bullish one and it closed bullish, this would have been the open and this would have been the close. So we have 4 touch points of the candle: the high, the low, the open and the close. And this is the fundamentals for the candlestick patterns. These highs, lows, opens and candle closes are gonna give us the signs of where price has been and what's most likely next to occur. Let's go over the first one. It's called the hammer candle. The hammer candle is actually quite important in finding bottoms or tops in the market. Let's quickly go over why. So we have our candle right here, and let's just say, let's make it red for example. We have our bearish candle now, and price is not looking great, it's going down. So let's just say this is an hourly candle. On the minutely candle this gets bought back up, and this hourly candle finishes exactly like this. So it managed to flip itself and close in the green, with preferably the wick not being too exposed. A little wick is fine, just like some hammers do. They have a little wooden stolp on top. Anything like this is not good. It's also fine if the candle closes exactly like this. This is a sign that the sellers, or if you would reverse it, the buyers are exhausted and price is going to continue in the opposite direction. The same of course accounts for a bearish hammer. If it's bullish but it manages to reject and close like this, once again with a little wick, you can expect prices to continue trading down. Another candle that's quite similar to this but is showing a little bit more indecisiveness is the Doji. The Doji is a candle that still gives an indication that hey, something might change in market structure, but there's a less of a visual representation of it. So it's still usable but not as, doesn't give you the amount of confidence that the hammer can give you in the markets. Now what's the best use case for the Doji? The advantage is actually lying within this indecisiveness. It might give you a little less of an indication as with the hammer, but this, especially on a really distributed top or bottom, seeing a lot of these Dojis might mean that hey, they are not sure where to push price from this bottom or from this high, so it's likely price is going to reverse in the future. So the Doji is not something to be traded completely or directly, but is a very good sign in seeing hey, where's price leading towards. Especially combining this with a future hammer candle, and you have a pretty good idea of where the price can go in the future. Alright, second candlestick pattern, we are going to be talking about stars. There are 2 variations in this, the morning star and the evening star, which refers to a bullish or bearish candlestick pattern. Now the stars consists of 3 candles. As you can see, I highlighted it right here. We have the first candle, in this case being bullish, and then we see once again a Doji being formed. And if you remember correctly, the Doji stands for indecisiveness or possible change in market structure. And with the third candle, we want to see the confirmation of this Doji to make it even stronger of a confluence. Ideally, you want to see a bearish candle in the evening star, and you want it to close at least below this wick right here for it to be valid. And if you see something like this, especially on higher time frames or near a top, you have a very good sign that you just caught the next trend in the market direction. And same goes, by the way, for the morning star. Assume this would be a bearish candle, a price were to push down, got bought back up, forms a Doji. Doesn't matter if it's a bearish or this bullish one, you want to see wicks and indecisiveness, and then the third candle has to be bullish in this case. And once again, complete above this, and you have a valid star pattern. Now let's expand on this candle right here, because this candle in itself is another candlestick pattern. Let's advance, shall we? So the single candle I just talked about is called an engulfing candle, and an engulfing candle exists out of 2 major candles. You need a lot of volatility for this one. Assume this candle closed bearish, right? It sold a lot off, and it closed not halfway, a very long body that closed very bearish. For price to engulf, it needs to recover the entire candle once again. So the next candle has to be bought back up within the same time as this candle got sold off. And this is a bullish indication of hey, the sellers got absorbed immediately. Price was able to close at this body, or preferably even just above it. You have now a bullish indication that hey, people have been willing to buy up this entire area or buy over from the party that sold it, and now we can expect prices to be continued, delivered higher again. It's vice versa for if it's a very bullish candle and it immediately rejects and turns bearish, you're gonna want to expect lower prices to be put in. We're gonna go over this in an example in just a very brief moment. I have one more candlestick pattern to show you, and then we'll dive in the charts, so stay tuned. Alright, final candlestick pattern. This one is called the 3 soldier pattern. For this, you need to see, almost like the evening star, multiple red candles, but instead of indecisiveness, it can just be sold off regularly. So as you can see right here, let me make it a little bit easier by making this one bullish. And let's assume the other gray candles are bearish, right? You can see them going down. So what we want to see with the 3 soldier pattern is some sort of resistance being formed. And for example, let's just quickly take the top of this candle. We want to see the bearish candles being formed and not really engulfing or forming like a doji, just a regular candle, and we want to see the upper wicks of the bearish candle keep pushing into resistance and rejecting it, so being sold off again. So we want to see at least 3 of them. I highlighted it right here. You see the bullish candle, then you see 3 bearish candles, but you also see them tapping into the same area over and over again. This is where we can expect buying exhaustion and price to absorb the liquidity, and eventually the next candle that's gonna be printed in to turn out even more bearish. So it looks something like this. Eventually the wick will no longer be able to sustain the test in the resistance, and it would just be a free fall going down and most likely retrace this candle completely. Once again, same example. If it were to be a bearish candle, you would want to see the bullish candles, and you would want to see it tap into the near the support zone, and eventually the price will continue going up if it can hold it. Now we've come to the final section of this video, and this is by far the most important one. So congrats if you managed to follow all the way through. Now it's gonna get really interesting. Alright, let's go with some examples, candlestick patterns. So for those who do recall the engulfing one, we can see right here already from a couple months ago, we see a bearish candle. We see it being bought back up completely and doesn't even retrace much, keeps going up and takes the nearest high, completes the engulfing candle. So what's important with these candlestick patterns is you want to see it play out, and you want to conclude that it played out when it takes the first significant amount of liquidity. In this case it would be the nearest high. Some people would call this a low-hanging fruit or just to take profit in general, but after it take this is where you usually would set your stop loss secured when you're trading and let it ride from there. Now let's also look at a couple other examples I showed you. Right, let's quickly go over the dojis and the star patterns once more. I highlighted it out already right here. I hope you can see this. This is the evening star having formed, the bullish candle. We have a hammer, we also have a doji in between it, and then the last candle closes below the bullish one of the evening star. Pattern gets completed and price doesn't have any strength anymore. Once it loses the beginning of the evening star, price just continues running down. Of course this line here would be a first take profit because it's the first significant liquidity, so don't forget that. Let's go over the dojis now. Yeah, right here we already had seen one forming inside of the star, and at this top we can see as well 2 dojis having formed and showing the indecisiveness once price is trading above a new high, looking to form a new structure. Pretty much on the second candle we can already see, alright, there's a lot of indecisiveness. The middle candle rejects it already, bounces back up. Candle afterwards, once again same story, as upper wicks and bottom wicks, closes indecisiveness. So this is your indication that hey, this move, something is smelling off here. This is not correct. This might reject, or you're gonna have to want to see the candle play out. But once you see this candle close bearish, you have your confirmation that yeah, this top was not sustainable, and as you can see, price continues trading down, buy and sells. It's time for the final section, the bread and butter setup. This consists of 2 major parts, the candlesticks and my main liquidity trading setup. So we want to be looking for some sort of change in market structure, and what we went over earlier, some of these candles can be a good indication that hey, the trend in the market is about to change. We then combine that with our trading strategy of liquidity, and we have a deadly setup to snipe bottoms and tops in the market. So let's go for some examples now. So this is applicable to a lot of time frames. I prefer anything above the 15-minute time frame. That's just me as a trader. I'm not saying anything below will work, but it's not what I'm personally comfortable with. So it's gonna be your decision to decide whether you tweak this to what time frame you prefer the most. On the hourly, you're gonna see a lot of setups like this form. So what we want to see is a sweep of liquidity. This is just a generic one, but ideally you want to see a candle that sweeps it to play out with one of the candlestick patterns that we talked about. So right here we can see a nice hammer being formed after the sweep of liquidity. I can suggest that some traders who have already have a lot of experience in the market are gonna ask me like, why would you buy this when you have this low right here to trade below? You would say this is the most significant liquidity, but the truth is this candle right here is the candle that caused the shakeout of the liquidity that was built up right here. So this candle cleared up the liquidity that was sitting right here, which means this low right here, after it takes it and closes bullish, you can suggest, alright, this has been rebalanced, okay, this has been rebalanced once again, and we can now expect higher deliveries because there's not enough urgency in taking this low once again because it already did this. So we see this hammer close candlestick pattern, and this is where we can enter a buy setup. So we buy once the candle closes. We don't buy in between, we don't buy when it just pumps above. Once the candle closes, you want to be buying this, and this is gonna lead into you buying at a higher price. But once again, we are usually trading at tops and bottoms on this, and we want just the most confirmation possible before we enter our setups. Then stop loss goes at the wick. You aim, what I said earlier, you aim for the first major point of liquidity. If you're really crazy, this would be your major liquidity. You could also say the top of this candle is a good zone to start offloading. So I would personally take this. This would already put you on an 8-to-1 risk reward. Of course, you're gonna get wicked out sometimes, or indeed see this run below this, but this is what I would call an A+ setup, honestly. The sweep of the lows, the candle closing with a bullish hammer, and price not even retesting it, continue trading up and eventually taking liquidity. We then also have an example with an engulfing candle right here. This is a little bit harder to trade because we see our top right here and we see it get taken, but the candle closes bullish, so this is not really a trade to take. However, we get blessed with one final sweep right here. This candle decides that there's enough liquidity at this wick once again. It then takes it, and this time it closes bearish. And on the higher time frame, this candle even manages to close this with an engulfing candle, taking out the entirety of the, was it 6 hours? Yeah, 6 hours. Taking out the entirety of the bullish candle, starts trading below it, you enter short on the hourly. Let me see, yeah, once this candle closes, you enter short and you aim for the first real liquidity right here. And then also this one right here would be your second take profit. So pretty good stuff. And then eventually you would get, it would retrace again, but not after taking 2 major points of liquidity. It's a good sign to see these wicks and these rejections or a hammer being formed after taking liquidity. This is your territory for this strategy. You want to see players getting stopped out, and you want to see the next candle be a good candlestick pattern that can indicate shift in structure. If you want to be trading alongside of us or need more guidance in your journey in becoming a profitable trader, definitely check out the link in the description. This will bring you right to our Surge Trading community and we can help you from there. This has been Void from Surge Trading. I want to thank you for watching this video. If there's any questions, leave a comment, and also don't forget to like the video, guys. Take care.